What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 30th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to spend some time to talk about the infamous $40,000 resistance range that's got everyone concerned in Bitcoin's price. And I now want to talk about why I don't believe we're revisiting 30K, but also why it's not a big deal to see some red price action at a big even level like 40,000, an expected resistance range. So we'll not only do some short-term price analysis, but also focus in on long-term price analysis about how long it could reasonably take to get back up to 65K and start climbing to new all-time highs in Bitcoin's price. But it all centers around setting reasonable expectations. So let's go ahead and talk about that here today, guys. You won't want to miss it. Let's go ahead and dive straight into it. So I want to go ahead and take a step back here about 10 days, not too long ago, just 10 days ago, when Bitcoin was chartering down around $31,000, $30,000, $29,000 in price. Back to a time just 10 days ago where people were extensively concerned about the state of the market. In fact, I would bet in this case, whether you're looking at short interest, whether you're looking at the kind of general active trading community in crypto, that there were a lot of people, even some people that I admire or respect in the space, who were on the narrative that we were going to 25K Bitcoin, that we were going to do something we've never done before, which is revisit the previous all-time highs of the previous cycle back in 2017 at $20,000. Right? Everyone was so gun-ho on this that the market was about to break through a consistent support range that every time has seen pretty solid buy-side price action, and is also the support range after the first wave of breaking through the previous 20K all-time highs. Right? You can see here very clearly the buyers come in here pretty much every single time, and we continue to rally for a couple days onward. But everyone was so gun-ho back then. That was the expectation. The reality, on the other hand, played out the complete opposite way. We went from around $29,000 right when people thought things were going to break to having an exuberant 9-day rally to the upside, upward towards 40 to 41K. The expectation and the reality, about 100% difference. Right? Now, I don't want to focus on saying, I'm not here to kind of go on that mentality of, oh, I told you so, or say that, the being bearish or at least concerned is not a good thing. I'm not really here to focus on that, right? We already know what's happened so far. Prices are back up here. But I want to go ahead and talk about how people's mentality can shift so quickly because of the psychological effects of cryptocurrency markets, right? Again, just like how everyone was bearish here, or a lot of people were, now a lot of people are overtly exuberant and bullish. After 9 consecutive green days, your Blockfolio account is constantly ticking up. You're starting to see your balances rise. You're starting to feel good. FOMO feels natural yet again. It feels like it's time to take risk. People start trading on leverage. They start taking on excessive risks that they probably wouldn't beforehand. Whereas they were closing positions, they're now reopening them, and they feel like nothing can go wrong. But when you get one single red day, because you're trapped in this psychological mindset, the next day, once prices are down, you feel like calling the SEC, CFTC, and pretty much any other financial acronym you can think of, including your grandmother. And that's the problem that so many people are caught up in. The emotional swings on the market, especially if you're looking at time frames like the 5-minute chart, because dips like this where you go down 3-4% can look really concerning after being in a neutral trend for some time. It can make you think that the market's over, especially after the past couple days in your perspective you've been seeing up and up and up and up and up with no questions asked. That's the problem here that so many people find themselves in. And I want to go ahead and actually spend some time here today to provide you guys, I think, with probably what is the most important and most valuable information I can on this topic, which is how to set reasonable expectations for recoveries in price. Again, we're of the narrative here that we are not going to revisit the 30K because that's just not generally what happens with these recoveries, especially when we start to get these times for rallies. And I want to talk about the time frame analysis, setting expectations for how long it's going to take for us to revisit back to those all-time highs, because we have many examples of this throughout Bitcoin's price history. So let's go ahead and take a step back here all the way to 2012. Right? So 2012, we'd rallied from around $2.30 per Bitcoin all the way up here to $7.30. After a brutal correction down to $3.85, 184 days later from that peak, we revisited the previous all-time highs and started to continue higher. We now started to make Bitcoin at 727 look like a blip on the map. We went up all the way here to $16, and I think an absolute high of $16.41, collapsing within a matter of days downward towards $7.25. Bitcoin must have been done by then. Well, 157 days later from setting those all-time highs, we not only went back up to the same price range, but climbed up higher all the way up here to 280 with practically no resistance, no significant corrections. $16, now a small blip on the map. But after that, we went from $260 downward towards $46. Must have been the end of Bitcoin. Well, actually, 210 days later, we came back to those previous all-time highs. And not only that, we rallied all the way up towards around $12,000, just under $12,000 for Bitcoin, and then entered into an actionable bear market where we made that general range in the past some form of support, right? Let's go ahead, take a look here as well. Back here, 2015, setting a peak around $500. Took us 205 days to get back up to that range. Pretty significant correction, $500 down all the way towards around $300. Clean 40% correction. Well, we recovered back, and after that, we went on an exuberant rally to $773, and then collapsed all the way down to $461, only to revisit new all-time highs 181 days from the previous high. See these lines that we have drawn here, right? And after that, continued on to have a more than 20x in Bitcoin's price. So when we take a look at all these time frames here, these kind of 5 examples we have here, we have one that's 181 days, 205 days, 210 days, 157 days, 184. We can go ahead and average these together, but I think a very nice simple figure to work with, and it's not meant to be the ultimatum here. It doesn't mean it's exactly what we have to follow, but just to keep things simple, is a period of 200 days. Considering the expanding cycle theory from bottom to top, that the cycles are getting longer, right? That a reasonable conservative estimation, right, would be about 200 days. It could be a little bit sooner, could be a little bit longer, but I think 200 is a good period of time to focus on. And that leads us to late October, where we'd be back at 65K for Bitcoin and possibly set ourselves up for a position where we could rally to new all-time highs. Sounds pretty good to me. Especially considering that we're already 106 days into it. We're already halfway through. Not bad. And the great thing is we went through the rough part of it, which was price declining. The next half is going to be price ascending back to the all-time highs. And I want to go ahead and kind of talk a little bit about not only how this could look, but outside of that as well, talk about why, in this case, like, you know, even if, for example, you had bought at the worst time here at 65K, while you could have bought at the worst moment in the market, it still makes sense here to actually maintain a level head and possibly not FUD or sell out your positions in the market. And this is why I didn't sell my positions, even though we talked about the lowering highs and lowering lows, right? Let's go ahead and talk about it. So first off here, let's just think on a very simple theoretical principle, right? Before we even draw what it's going to look like here to recovery, let's just draw a median line here towards our target date from where we are. If we think that we're going to be at $65,000 from where we're at right now, right, if you want to do the price analysis, we can do that as well. That's going to be a nearly 69% rally in price action. Now, here's an important question you should ask yourself. If you're so uncertain about Bitcoin at this point, you do believe in this case, yeah, maybe it's going to rally back up to this range, right, in about 90-something days, but I'm really concerned about it, right? The thing you should be thinking about is, okay, if you're going to sell right now, what are you going to have your money put into? Is it just going to remain in cash? Are you going to go invest it in equities? Are you going to put it somewhere else? Because if you are confident in this idea that we are going to revisit back to the all-time highs, I think we've kind of gotten beyond the point here. If you guys think that we're in a bear market, that's completely open and fine. We can agree to disagree. But I just haven't seen any models within the data science as well as price analysis that give me that assumption. The overall point here to focus on is that if we think that in 90-something days, Bitcoin is going to return 68% and possibly not only that, climb to higher levels, why would you care about selling on these dips? Right? Let's say very clearly, for example, right? You're at this range here. You get your money back, or it's at least neutral. And then after that, you're expecting, as we always generally do, climbing through our previous all-time highs, that we start to climb higher in price, right? going towards those levels of 100K. Maybe, for example, you're more on the optimistic end. You think it's going to be 150K. You think that it's going to be 200K, right? Let's just keep it minimum conservative. You think probably around 100K is a reasonable level. I can't tell you guys of any market. And let's really extend this out. Let's say that we wait until May of 2022, right, for that 100K price target. Can any of you guys name me a market that from back here in April 2021 here towards May 2022, more than a year's worth of price action, and after a brutal correction, is still going to yield you a 55% return? I can't think of any market that's going to do that. And this is the major point that I want to drill, guys, which is that even though you've had this correction, there's a big reason why people don't try to trade these dips. If anything, they just average in on discounts because of the sheer fact here that even if you're in that position where you bought at 65K, it always ends up being a blip on the map comparative to previous, to the new all-time highs that you set in the market. Those previous all-time highs are just, again, one of the many points on the journey up towards a much higher price target. Right? And we can see here that we're already through the worst of it. Why sell out now? You know? And that's why, again, I the point that gets me so frustrated here, and I know I've been a bit scattered on trying to make this point, but I think this will summarize it well. It makes me so frustrated to see people when we're at peak fear, when we're at a peak discount, that people are willing to sell the underlying asset that they have. When, if you follow the logic of going shopping for a good or service that you like, you should enjoy discounts. Right? That's exactly the same mentality you should have in markets. And I'll go ahead and just kind of demonstrate how this could easily look here. You know, we've been in this kind of consolidation range between 30 and 40K for a while. But the whole goal here is now, after that we've had this kind of breakout rally, one of the most positive rallies we've seen so far and one of the most substantiated ones, what we're likely going to see is probably a pullback here to, you know, a key support range that could form around 37,500 or 37,500, maybe a little worst case scenario, maybe around here around 36,000, right? This was resistance a little bit back here in the past. Maybe come down to this range. We come back up to revisit 40K again, clear through it. We come down, make it support so that we provide a higher base here for price, and we start to slowly chug up higher for Bitcoin, having some corrections along the way. And boom, revisit back up to 65K. Now, does that seem like a pretty reasonable analysis here? I'm not saying that this is exactly how things have to work. This is a very kind of bland, kind of zigzag pattern, right? There's probably going to be some, as you can see here on the chart, some sudden surges, maybe harsher corrections than what we drew. But generally speaking, a logarithmic chart, this looks pretty reasonable, right? Historically speaking, this is pretty good. And along with that as well, it gives us the time frame analysis that we can see here. 200 days. Where eventually, as we go time through time through time through time, we eventually complete that 200 days and are much more likely to be in a position where prices can start to not only revisit the all-time highs, but also potentially break out to new levels. So, October, not a bad deal. Like I said, again, I want to emphasize this point again. I don't think that there's going to be any markets that are going to perform 65% or more. Maybe some altcoins, maybe some individual stocks in the equity market, perhaps. But I can't tell you guys of a bet that I'd be more confident in going up 65% than Bitcoin. So, anyways, guys, I've rambled on enough, but I hope this video provides some good context, provides a bit of clarity on expectations in the market, and it's just a good reminder, again, not to get caught up in the emotions of the Bitcoin market, to work on expanding those time frames and focusing on the broader picture. Because I genuinely do believe, again, that we have a chance of reaching six figures on Bitcoin. I don't think it's completely unreasonable, but at the same time, as you all notice here, just like how we don't want expectations being exaggerated to the downside, we also don't want exaggerated upside expectations and the sense of things happening overnight, just like that, right? It's never going to happen that way, guys. It's just not. So we have to keep things rational. We want to be pragmatic optimists. That's the term I was looking for. Anyways, guys, if you like this video, consider dropping a like, consider leaving a comment as always, and if you haven't already, consider subscribing. If you like content like this, you guys are welcome to check out more of the videos we have on our channel. But thank you guys so much for watching as always, and I'll see you all in the next video. Take care, everyone.